Hello YouTube, my name is Tom and I'm the crypto investor, and today I wanted to talk to you about the exciting world of price to earnings ratios. What are they and why do I think they're really important in understanding the value of cryptocurrency? Alright, we're going to start with a tweet here by a chap called Austin Barrick saying, over the last 30 days, Ethereum has generated $1 billion in fees, averaging at 35 million daily. Right now these go to miners, however once we have EIP 1559 this summer, a large percentage of that value will be directed to Ethereum holders, and at current prices, ETH has a PE ratio of 18.9. That's big news for me, but it might not be to you, so let me try and unpack that tweet and share a little bit about why I feel that's significant. So he's put a price to earnings ratio on Ethereum, and let's just talk about what price to earnings ratios are. So basically, this is something we use to give an approximate valuation of stocks. So here we go. This is Ford Motor Cars. And the way you work out the price to earnings ratio, and this is useful stuff, so stay with me here, is you take the total value of the company, so all the shares added together. So in this case, the market cap of Ford is $59.47 billion. And then you divide that price by their earnings. And then, so their earnings are $3.98 billion. That's how much money per year Ford Motor Cars make. And if we divide those two numbers, come on, let's do some basic maths here. So we go 59.47 divided by 3.98, and I don't have the long tail of those numbers, but this should be pretty accurate. Here we go, we get 14.9. So the price to earnings ratio, well, it says it here actually. The price to earnings ratio is 15.01 because they had all the numbers. So what does that mean? Well, the lower the price to earnings ratio, the better value a stock is considered to be. So obviously the more money it's earning compared to the value of the company, the better value the company is. Just quickly, you have what's called a forward price to earnings ratio. That's basically on their earnings call. They said, next quarter we're going to make this much money. So based on that assumption, we get a forward price to earnings ratio. So in the future, next quarter, they'll have a PE ratio even lower of 8.9 if they do come good on that promise. So let's look at another example. Tesla Motor Cars, very different stories. So Ford, okay, maybe that's a company that's going flat, if not downwards. Tesla, we think this is going to the moon. So the market cap, the total value of all the shares of Tesla, is $600 billion. So it's 10 times that of Ford. And their income is $1.1 billion, 25% of what Ford is making. So completely different. So if we divide that total value by the income, we get a price to earnings ratio of 628. Basically that says this is very expensive, but people assume that in the future Tesla is going to be making a lot more money, so that's why it has this big valuation compared to its income. Their forward PE, how much they anticipate they'll make in the future, is 100. All right, okay, so now you might have some kind of clarity of what PE ratios are. Of course, there's everything in between and above and below. The average in the S&P, the top 500 companies in the US, is around 45 right now, which is higher than traditionally, but that's because we've had so much cash pumped into the system. Apple, Microsoft, they're around 30 or so price to earnings ratios. So let's jump back to that tweet and have a little chat about it. So why is this really important? Okay, so until now, cryptocurrencies were very speculative. We just were like, well, these are cool technologies and maybe there is some application in the future. But now we have a yield. Now hedge funds are going to be very interested. Once they know that there's money being generated by these cryptocurrencies, then they find it easier to justify investing in them. And it certainly makes sense. So we can see that compared to Ford, well, the price to earnings ratio of Ethereum is about the same as Ford Motor Cars. And I don't know about you, but I think the growth potential of Ethereum is a little bit more exciting than Ford Motor Cars. I think a fairer PE ratio for Ethereum would be more like 100 or 200 based on the potential future application of Ethereum. So it just is a way of indicating that Ethereum is pretty cheap. Now, another thing to obviously consider is that these are the PE ratios based on today, based on the amount of activity on the network today. And this is not normal. We're in a bull market and we'll probably have a bear market. But over time, we expect that to even out. And so I'm not really concerned that these numbers are based on, this kind of hyped phase right now, because I think this is pretty much going to be the norm within another year or two, even after a bear market. So what Austin Barrack has kindly done is he's also worked out these PE ratios for other DeFi coins. So DeFi is what has made this revolution for me in PE ratios possible, because DeFi yields income. That's why DeFi for me is the best value proposition in crypto right now. So if you look at Sushi, their DEX has made $3 billion, yada, yada, yada. Basically, the PE ratio of Sushi is only 4.3. I don't think there's any companies in the S&P 500 which have a PE ratio as low as 4.3. So unbelievable value when you consider Sushi. And another example, Yearn Finance coming in with a PE ratio of 13.7. So, this for me it speaks volumes, and I know that it will be speaking volumes for hedge fund managers and money makers and anyone who's looking to get into this space. So I would encourage you to consider this metric, and hopefully it helps to give you some kind of justification and clarity of why DeFi is good value. I worked as a financial advisor for 10 years, so I can hopefully bring a bit of stock analysis into crypto. If you think that would be useful, please do comment and let me know what you thought of this. We've got to 400 subscribers. We're very new and young, but if you could subscribe, share it with your mates, that would be very well received. This is not financial advice. I'm just hopefully giving you some kind of education on price to earnings ratios if you weren't familiar with them before. All right, I hope you found it good, and happy investing everyone, and I will be with you with a new video very soon. All the best.